Greetings, everyone. This is the Gardening Snail of Livingston, California at Arcalian Park. If you're curious about what our local politicians are up to and the goings-on at City Hall, welcome to my channel. If you haven't already, please subscribe and hit the bell icon so you're notified when future videos are uploaded. The following video is an excerpt from the October 1st, 2019 Tax Sharing Agreement Workshop and only includes the presentation given by the Contract Finance Director. The discussion that took place afterwards will be the subject of a future video.
City Council workshop has come to order. There's no roll call. This is just an informal workshop, so folks, just ask questions at any time you want. So there's no formality to it. Okay, guys, everybody?
Let's still do the roll call because it's still kind of a workshop.
Okay, all right, well, let's do a roll call then. Can I get a roll call, please?
Roll call. Councilmember Baptista.
Present.
Councilmember King.
Present.
Mayor Pro Tem Garcia.
Present.
Mayor Sammer.
Present.
For the record, Councilmember Aguilar is currently non-attendance, but his attendance is expected soon.
Thank you. Okay, so let's go ahead and begin with the workshop, please.
Mr. Mayor, Mayor Pro Tem, City Attorney, City Manager, Council members, those that are in the audience, I want to welcome you this evening. And we are going to talk about revenue sharing. This was requested by the council from our last meeting. And so what we're going to look at, first of all, just so we can kind of get all on the same page, is why is there revenue sharing anyway? I mean, why is it something that we're even having to deal with? Well, what we've got to look at is we've got to go back to Proposition 13, which was approved by the voters back in 1978. And what it did is it capped property taxes at 1% of assessed value and limited assessment increases to 2% unless the ownership changed, there was a sale, or value was temporarily reduced. And we experienced that when we had the downturn in the housing in the mid-2000s. The property values decreased considerably. And so the assessor reset the values and reset the property tax amounts. But what's key with Proposition 13 is that there was a 1% tax rate, and it had to be shared between all local governments. Whereas before Proposition 13, each local government could set their own property tax rates and levy the property taxes, and the average property tax rate back then was over 2.5%, 2.67%. So we can kind of see Prop 13 capped it at 1%. Prior to that, if you kind of looked across the state of California, the tax rate was about 2.67%, and that's because every local government kind of did their own thing. Well, the voters said, we've had enough. You're causing us to lose our houses. Our taxes are going up so much, we just can't afford it anymore. And so, as the bottom sentence here says, this caused a huge reduction in property tax revenue to all local governments. So everybody, county, cities, special districts, all of their property tax revenue dropped significantly, and they were left scrambling on how to balance their budgets. So what happened was the legislature in their wisdom said, okay, even though the voters have said there's a cap on this, we're going to try to help out the counties by implementing the Section 99 to the California Revenue and Taxation Code. And what that said was that if any city wants to add property that was previously in the unincorporated area or in the county, there needs to be an agreement in place that shares the property tax. Because when property would move from the county to the city, the property tax would follow it. And the state said, wait a minute, given Proposition 13, we need to kind of come up with some kind of an arrangement to share property tax. So this became revenue sharing. Section 99 specifically addresses the sharing of property tax only. No other revenue is mentioned in Section 99 of the California Revenue and Taxation Code, just property tax. So what this means is, without an agreement in place, no annexations can occur. So that's really kind of what revenue sharing is in a nutshell. So kind of what's been going on in the city of Livingston with revenue sharing? Well, the latest agreement between the city and the county was entered into in September of 2004. And this agreement only included property taxes. It didn't include sales taxes. But the county then determined that the Livingston General Plan that was adopted that carried this out through 2025 conflicted with the county general plan. Now, we might not agree with their reasoning, but nonetheless, they canceled the agreement in July of 2009, and negotiations have been ongoing off and on since then to arrive at a new agreement. So as we go through these series of slides, there's some words that I think we all kind of need to understand because they're kind of the property tax lingo or the property tax speak, for example. So the first one, of course, is annexation, and that's not a word that we've invented or the county's invented. It's actually a part of the Cortese-Knox-Herzberg Local Government Reorganization Act of 2000, and it means attachment or addition of property to the city. So when we talk about moving unincorporated or property from the unincorporated area to the city, that's what we mean by annexation. And again, that's not our definition. That's what's in the law. So the ad valorem property tax, that's another term that we will see through revenue sharing. And that's the tax that's imposed on real and tangible personal property based upon the value of the property. And I think for those of us that own houses or own property, we get a tax bill every year, and that's what we're paying is the ad valorem property tax. Now the property tax then is broken down into kind of two pieces. One is the base property tax. The other, which is the next line, is the incremental property tax. Now the base property tax is what the tax is at the time the area is annexed or brought into the city. So for example, if the property is in the county and for whatever reason that property is assessed $1,000 of property tax, when it comes into the city, that's considered the base property tax. The incremental property tax is the increase or decrease in the assessed value over the base property within the annexed area. So for example, if raw dirt, farmland or whatever is annexed into the city at a certain value, that's base. If it's developed and there's houses or commercial properties added to that property, then it increases in value and there's a tax on that, and that's known as the incremental property tax. So there's kind of two pieces that are going on there. The other term that we see, and we talked about a little bit about this at our last meeting, is ERAF. That's an acronym for the Education Revenue Augmentation Fund. This is a percentage that's required by the California Revenue Taxation Code to be transferred to the state ERAF fund because back in the mid-2000s when there was the downturn, the state experienced a severe revenue shortage, and they go, oh, let's just tap the counties and the cities' property tax. So that's what they did with this ERAF. Legislation has been passed since then. Actually, it was a ballot measure that said the state can no longer do this kind of thing, but nonetheless, this went in place and is still in place at this time. And that money goes for schools, is what that's for. So what I thought would be interesting is to just kind of show you right now everyone that gets a bite of the property tax dollar. Because when we talk about property taxes, you think, oh, it's the property taxes that are paid in Livingston that come to Livingston. Well, that's not the case. So if we look at this right here, the unincorporated property tax dollar breakdown, that would be property that's not within the city, it's in the county. We can see of the dollar right here, all these different areas get a little piece of that. And you wouldn't really think that mosquito abatement would get a little piece of the property tax. Well, it does. The Winton Cemetery, well, it does. The schools, of course, all of them, the community college, the Livingston Elementary, Merced High, they all get a little piece of it. And County Fire gets some. And again, this column over here is when the land is in the county, not within the city. And that's why you see under the captions of Livingston, NA, because if it's in the county, we're not going to get any money from that. But currently, for those properties that are within the city and are paying property tax, you can see now pretty much everybody kind of drops a little bit, and Livingston now gets a piece of it. There's the ERAF piece for Livingston, and then the Livingston General Fund. So again, this is a breakdown for properties that are currently within the city. So it's a bit eye-opening to kind of see all the people that kind of have a little bite of the pie, you know. So what I want to look at now is kind of where we started with the revenue sharing negotiations. And if we go back to kind of last fall, where I would say negotiations were probably the most serious that they had been in quite a while, we can see over here that the county proposal was that the county retain 100% of the base. If you remember the definition that we just said about the base, and the increment, we looked at the definition of the increment, from the fire fund. That's what they were proposing for that item. The city at that time said, okay, we're good with that because we have a contract through the county for CAL FIRE to provide fire service. We might not agree that we're getting the value that we should for the money that's going to them, but nonetheless, we said that's probably a reasonable thing to do. The next part was, which is really what was in the old revenue sharing agreement, is that the county retain 100% of the base. In other words, whatever property tax came across when it came into the city, they keep it, and then they would split the increment 75 to the county, 25 to the city. And that's, of course, after the ERAF pieces have been deducted. And what the city proposed was, you know, nobody's going to be made whole in this deal. Nobody's going to have their full cost of service paid by sharing of this revenue. So we think the fairest is 50-50. Let's just do it 50-50, not 75-25. And then the proposal also was that it be calculated in a little different way on the ERAF, so actually both of us get a little more money. But that's kind of what was being proposed at that time by the city side. Then what the county said was, through December 31, 2021, the city will share 2.5% of the city's 1% sales tax. And the city said, no, the prior agreement didn't have any sharing of sales tax, so we don't think it should be part of this because the property tax sharing in the government code only speaks of property tax sharing, so we don't want sales tax to be a part of this. The county went on to propose to say on then January 1, 2022, to the 5%, or to the 2.5% of the city's 1%, they would add another 5%, And so at that point, the county would be receiving 7.5% of the city's 1% Bradley Burn sales tax. And again, the city said, no, this really needs to be about property taxes. Sales tax shouldn't even be in this agreement. That was what was put forth at that time. The other points here are the 10-year agreement with 180 days prior written notice before the end of any fiscal year. And the city basically said, yeah, that works for us. The county also said cancellation of the agreement will not affect the county receiving a share of the sales tax or property tax. So in other words, if the agreement was entered into, even if the agreement was terminated, those would not stop. And again, the city said, you know, we don't really think sharing of sales tax should be a part of this, so we don't think that should be in the agreement. The county then proposed that the city will agree to participate in future discussions to establish an agricultural mitigation program for productive agricultural land and urban development. This is where prime ag land that's in the county is brought into the city, and there's a lot of issues around that. So the city said, yeah, we don't have a problem with that. That's fine, we'll do that. And then the next thing that the city wanted was to agree to communicate and coordinate with county on general plan policies. And the city said, okay, that works for us. We ought to be talking. We ought to be working together. Our planning ought to be coordinated. So that's kind of where, again, we kind of got serious. It started about a year ago. These are kind of where the county was proposing. Here's kind of what the city said. No, this is where we think we ought to be. So now what we can look at is the current county proposal. And the main deal points are the county retains 100% of the base and increment fire fund. That kind of goes back to where we started originally. The city doesn't have any issue with that. And the second one is the county agreed with the city on how they would deal with the base and increment. In other words, the city would get 100% of it, the city EREF would be subtracted, and then we would be dividing it 63 to the county, 37 to the city. And if we remind ourselves of kind of where we started back here, it was this deal point on the city's side, but it'd be 50-50. But where the county came back and said, okay, we agree with kind of the way your methodology is, but we think it ought to be 63% to the county and 37% to the city. So it's better than our original agreement, and they're giving up a little bit from kind of where they started. And then effective January 1, 2024, the city would share 5% of the city's 1% Bradley Burn sales tax. And then effective January 1, 2029, the city would share 7.5% of the city's 1% Bradley Burn sales tax. And so that's a little different from kind of where they started, where they said through December 31, 2021, it would be 2.5%, and then 2022, it would be 5%. So the dates on those have been pushed out a little bit. The 10-year agreement is the same. They're still proposing that the cancellation of the agreement will not affect the county receiving a share of the sales tax or property tax. And again, back where the city started, they didn't feel that sharing of the sales tax was appropriate. And then the last 2 points were where we had agreed before on discussions on agricultural mitigation and communication and coordination with county and general plan policies.
Hey, Brad?
Yes.
Can you back up one, please?
You betcha.
Okay, where it says on the cancellation, on there, I believe we're saying that county can't counsel on us unless the voters change the laws to what affects the, I believe that was in the agreement, the proposed agreement, that county can't counsel, and also that they have no say in our general plan, that it has to go to LAFCO, I believe, for annexations and all that. That's not exactly how it is. I don't think so.
Well, if you're speaking of these words down here,
Yes, no, the first one on top where where it says, yeah, cancellation 10-year, I believe that's not exactly how this is.
well,
If I may.
and I certainly
Okay.
defer to you, Mr. Mayor,
No,
but
I'll have Jose, go ahead, Jose.
So just the slide is correct about the 10 years. The cancellation, however, it says the 10 years provided that either party may terminate this agreement due to changes in state statutory law, court decisions, voter decisions, or state administrative actions having an impact on revenue. I have talked to county council, mayor, as I informed you, and we may be adding, a little bit to that sentence, but it does state that some event has to happen. It's just not a free will of wanting to terminate. It also provides, and I think what you're talking about, Mayor, is originally the agreement stated that one of the reasons for cancellation was if there was inconsistencies that they thought between the general plans, and that's something you had them take out.
Yeah, so I don't believe that's exactly correct.
well, but if I might pose a question to our council, I mean, there's words on how it gets terminated, but regardless of how it gets terminated, I respectfully request kind of your thought on this.
No, I'm talking about the 10-year agreement. They can't, that within 180, that's not, they can't, we can't, and they cannot cancel on a 180-day notice. Yeah, for no reason. The reason we did that is because last time we thought we had an agreement. They decided one morning to wake up and say, you know what, hell with you guys. That's the reason is that they cannot cancel this.
Okay.
The second line, you're absolutely correct.
Okay.
I'm going to let everybody answer questions that right now. And also the general plan, if they had proposed that it has to be consistent, where they were trying to control of the general plan, that if it doesn't meet with the approval, no, that's been taken out as well.
Yeah.
Yeah, they have no control over our general plan. We control it as long as LAFCO agrees.
Yes.
County's
yes.
out of the picture.
Okay, so we good on this then? Okay. No, thank you. Okay. Okay, the next slide that I would like to go through is the fiscal projections from entering into this agreement. And this line over here, dollars. This axis here are years. And as we can see here, there's really nothing in 1920 or 2021 because typically annexations take a bit of time to get through LAFCO, to get to the point where there can actually be something done to that property to improve it. So we've started a revenue stream out in 21-22, which is a few years out. Now, we need to note that this revenue, property tax revenue, is just from the newly annexed areas only. It's not from any other place. That's the only place that it's from. The red bar right here, this is the first 6 months of the sales tax paid out to the county, which starts January 1 of 2024. So we got to remind ourselves that, again, the property tax is just from the annexed areas. The sales tax is citywide. There's no restriction as to it just coming from the annexed areas. So we need to understand that's kind of why we're seeing a lot of red above the green, because the sales tax is citywide. The property tax revenue is just from the newly annexed areas. So again, in 23 and 24, that's when the sales tax would first show up. It starts January 1 of 2024. In 24-25, that's when we have a whole year of sales tax. And as we can see, the sales tax, because it's coming out citywide, it pops up here pretty good, and the property then slowly grows to where we get out to 27, 28, and it's about a break even. okay? 28, 29 then is when the other 2.5% kicks in January of 2029. And as we can see then, we kind of jump up above our property tax again, because again, this is citywide and our property tax is just from the annexed area. And so then in 29-30, this is when we have a full year of sales tax at the 7.5% paid out to the county. So as we can see, from kind of a revenue perspective, we'll have to figure out somehow to kind of make up the difference here on some of these if this is what the council agrees to tonight. Then are there any questions? That's my presentation.
If you found the information in this video to be interesting or informative, please give it a like and share it. And if you have any comments or questions, let me know in the comment section below this video. And thank you so much for watching.